Good afternoon, everybody. CC, good to see you.
Good to see you, Josh.
Yeah.
You've been doing the heavy lifting all day.
Yeah, I've been taking over the pre-market prep and stock trader network. For anybody that doesn't know me or hasn't seen me before, I've mainly been working behind the scenes with Joel and Dennis and everybody.
This is like one of those DJs that does like the 1 week on the air like thing for charity.
Yeah, exactly. Yes. Yeah, we're raising money. In case we don't get a rate cut, because that is the news today. Of course, we've been chopping around basically all day. Haven't really been going anywhere. So that's the big news, CC.
Yeah.
What do you have for us? What's should we prepare for with this Fed decision in about a half hour here?
Yeah, so not only have we been chopping around for, today, it's really been a week. So if you think back to, you want to pull up my chart, actually, let's start there.
Just doing that.
Yeah, so, this was the Thanksgiving week bounce. That was about a 5% bounce. And then we sort of completed that. And, going back to, I believe this is the Monday, or no, that's the Friday of Thanksgiving week. We've basically gone sideways. So we've basically been pinned around this 68.50 level. When we go down, we're only going down about 40, 50 points in the SPX. When we go higher, we're only doing about the same. The highest we've tested is, just shy of that 6,900 level. And this is something, not to like pat myself on the back a little bit here, but we've been talking about this on the show for, going back a solid month and a half at least, that when the SPX gets up to this 7,000 level, there is a ton of overhead supply. And that overhead supply built up in the late stages of this rally from the April lows. And it's a combination of, when we were at 6,500, let's say, or 6,350 in the SPX, and everybody was like, all right, the worst of the tariff sell-off is over. What are the price targets into year end? Almost everybody was at 7,000, right? And then on top of that, all of that option positioning of all of this stock getting bought, especially right here, people were like, all right, well, how high can this go? This can go, let's say our year-end price target 7,000. Let's sell a bunch of calls up at 7,000. And that's what's happened. The institutions have done it. Retail has, piled on top of those institutions. So you have this real significant overhead supply at 7,000 in the SPX. Now, how does that play out? Well, a lot of that is, it expires or will get rolled the last week of the year, that week in between Christmas and New Year's. Then it'll get rolled and it kind of opens it up and anything can happen beyond there. But for the last couple, call it month and a half or something, I've been positioning that my year-end target is also 7,000. I don't know how this Fed meeting is going to shake out. This will probably determine whether that's a correct take. We've almost gotten there. We've kind of stalled here. If the Fed, if the trader reaction to the Fed over the next couple of days is a positive one, I think we scoot right up to about 7,000 in the SPX. And you could sort of do the math of what that means in the other indices. That's about 2.5% in the SPX to the upside over the next 3 weeks. In the Qs, that would be a little bit more. In IWM, that might be a little bit more. We'll get to IWM because that could be kind of interesting if that breaks out from here. But that's sort of how I've been positioning into this. Now, that's sort of like the big picture into year end. Now, how could that view get screwed up? It could get screwed up today. And today is by far the most significant date for the rest of the year, which is odd because the options market's not exactly expecting a lot. If you want to go to the weekly, like the slide we do every week. So we're looking at these numbers. This is about, the SPX is pricing about a point set, not even a 1% expected move for, a 24-hour moving target over this Fed meeting, right? Which is higher than it was last week. If we were looking at this same slide from last week, that would be closer to 0.5%, maybe even a little bit less, which is extremely low. A 0.7% expected move for a Fed meeting is actually, it's more than yesterday, but it's not that much historically. When there's a lot of uncertainty into a Fed meeting, you often see closer to a 1% expected move. And a lot of times that kind of persists for those next couple of days because you don't necessarily get the full market reaction, until the Tuesday and into Friday, when people have time to sort of absorb what they just heard from Powell.
Yeah.
And so this is kind of interesting because if you look at these numbers over on the right, so looking out 1 week, the SPX is pricing in about a 1.7% expected move. This is how the options market is pricing potential volatility coming out of this meeting, out till next Wednesday. So that takes you right up to that, that you see that number 65.50, roughly, give or take, in the SPX. You're almost there. You're almost there to what we were just talking about, to year end. So there is a potential for us to almost immediately hit that level if traders like what they hear today. Now, the flip side of that is if you go back to that prior Fed meeting where it was, what's the word everybody using? A hawkish cut, right? That last meeting was a hawkish cut. So we got the cut. Everybody's like, oh, sweet. And then Powell started talking and he dialed down all of those expectations for what everybody had assumed was a path out to the spring of like pretty, regular rate cuts. So he sort of threw cold water onto that the last meeting. If you go back to that meeting and look on the chart, it's basically what kicked off all that volatility we just experienced over the last couple of weeks. It sort of untethered the market from all of this, I would say, overconfidence or complacency. But on top of that, it really unwound a bunch of the momentum trades we were seeing into that meeting. It was a pretty euphoric moment in the stock market going into that meeting, where I think Bitcoin was up near 120,000. IWM was basically at highs. You were seeing, quantum computing trades. You were seeing drone companies. You were seeing like just all kinds of speculative behavior in the market. And it was all kind of going vertical. That was right around the time of the, Oracle might have preceded it, but that crazy Oracle move on the government contract news. So you had all of that going into that meeting. And then when Powell threw cold water on the whole situation, it opened us up to basically, over a month and a half long volatility, essentially, until now. So now it's kind of interesting because you're like, all right, could the same thing happen? Are we going to get a rate cut? And then Powell's just like, no promises from here. What's interesting to me is I had sort of been assuming that the last couple of weeks until I started listening to everybody the last couple of days. And the last couple of days, you are hearing that word hawkish cut over and over. It's on TV. I'm seeing it on FinTwit or whatever. And so now I'm kind of wondering, is everybody too pessimistic about what's going to be said this afternoon? I don't know. I have no idea. And I actually don't know what the market's going to do out of this, which makes today so interesting for us to be covering this live. But I can tell you that options and the market are not that geeked up about a massive amount of volatility coming out of this. But I will say it was sort of the same setup into the last one, and it was wrong. So I still think overall my positioning into year end is that you only have a couple more percentage points to the upside. I think that's the more likely scenario, that we do make that last little move into year end. But so does everybody else. And the risk of this setup right now is that there's more disappointing, like you see what's going on in the Treasury market right now. The Treasury market's sort of getting ahead of this announcement today. And if that sort of keeps playing out, if like we keep seeing that US 10-year keep going higher above 420 and it starts heading to 450, that pours a lot of cold water on this rally into year end. But those are the kinds of things I'm looking for. I don't know what Powell's tone is going to be, but it will probably determine whether we go up 2.5% into year end or if we pull back 5%. Let's put it that way.
Okay, heading into year end, but I mean, we also have to consider, and I'm just looking at the headline here, we might get a new Fed chair announced before the end of the year too.
Yeah, which is that's funny. Well, no, it's funny in a couple of ways if you think about it. So one is, you would have to assume that announcement is going to be somebody that's like, all right, I'm going to start with 3 1-point cuts, right, to please the boss. So the market reaction, I'm joking, but the market reaction will be as if it's like that, right? Like we'll go higher and it'll be some guy or woman that's been talking about, that we need to be cut rates to 0 again. The other funny aspect about that, I would say, is what does that do to Powell's mindset today? Like, what if he does a DGAF reaction, knowing that
Right.
he's on the way out? It could sort of point his tone a couple of different ways. He could basically say, he could like tank it, kitchen sink it or whatever, saying I'm super worried about. He could dial up the tone, the negative tone of last time, right? So he could say, we're the Fed, we're balancing things, we're really worried about the labor market right now, but we're seeing, inflation's also worry, and we're, all of that kind of stuff. So he could just do it just to do it, right? And just be like, I'm negative, I'm going to be kind of hawkish, who cares? I'm out of here in a couple of months anyway. Or he could just be like, listen, I don't know how old Powell is, but like, does he really want to put up with like that kind of, people screaming at him for the next 4 months? And so he might just be like, you know what, whatever, we're going to cut rates, we're going to see what's going to happen. He could be very positive and very dovish. So funny. It's actually kind of interesting stuff and like some psychology involved there. But I would think a new Fed, like an announcement of who's going to take over after Powell, I would have to imagine that's greeted bullishly in the market.
I think you're right, but I guess the question looming in my mind is like, is that how much of that is already priced in?
Yeah. Well, I don't know. So let's go. Do you have like the US 10-year on there? Pull that up on TradeStation real quick.
Sure.
So maybe I'll go big screen so I can see it on yours. I think that this is sort of the wild card going on right now, is the Treasury market. And I don't pretend to be an expert. I was never a bond trader. I was always equities and options. But there's a general sense that the bond market and the Treasury market is slightly smarter than the other markets, like the equity markets and all, right? It's less retail driven. It's less sort of driven by emotion and euphoria, right? At times it is driven by those things. But what's interesting is the Fed funds futures for this meeting just went through, they were on tilt the last month, right? They went from 80% odds of a cut this meeting down to 30%, now back up to almost 90%. Like, who's trading that, right? Because I can tell you what was going on in the Treasury market is as soon as Powell was slightly, hawkish on that, or at least not dovish on that last meeting, the Treasury market started reacting almost immediately, right? So the 10-year went down to 4 and like ticked like to 3.99 or whatever, and it almost immediately started climbing. And the Fed funds futures took a little bit, like they took like 2 weeks to realize what was going on. And then they went through like an insane amount of volatility. So now what's kind of interesting is if you look at the US 10-year over the last week and a half, I would say. So since the Fed funds futures have gone back from 30 back to 90 over the last 2 weeks, the US 10-year and the other sort of that duration have already started ticking higher. Like they're getting ahead of this Fed meeting. And I would take note of that, because that could start to be the, if and there's a lot of talk about like what's going on in Japan and things like that as to whether that's affecting it. I would just say Occam's razor that the Treasury market is expecting a cut, obviously, but it's not going, like it's the Treasury market's doing a hawkish cut setup right here. Now it could be wrong, but it's basically saying we're going to get a cut and we're going to get a kind of not dovish commentary, and that's why it's gone from basically 4 to 420 over the last like 2 weeks, the US 10-year.
Yeah, I sorry, I'm just new to TradeStation. I can't seem to get the 10-year itself up.
Yeah, and TLT is not. Oh, what's the TNX? Put in TNX. That's the 10-year. Did that work?
Well, that should work.
Let me see if I can pull up TNX. And we'll get to some trades here in a second. TNX.
Yeah, got it up here.
Okay. And so what are we looking at? What's that time frame? Pull up my chart real quick. What do I got here? I got a 1 month. That's a 3 month. Can you see that?
Yep.
All right. So what is that? TNXP. Oh no, that's wrong. Sorry. That wasn't TNX. You go back to yours. That was like a pharmaceutical company. Sorry. But anyway, you've got a scenario where, as the Fed fund futures have gone from 30 back to 80, we get that 5% bounce in equities. The Treasury market is basically like, all right, we've already priced all that in and we're starting to make our next move. So this is kind of interesting to me. I'm going to be really keeping an eye on this. I'll tell you, if this thing starts heading north of, if the 10-year starts heading north of 4.25, like it looks like it's going back to 4.5, we're going to have some issues. And to that point, if this does get screwed up, and I'm just going to show a IWM, right? So as this has been going on, go to my chart in IWM real quick. What do we got? We got 10 minutes to the announcement.
Yep.
So IWM, it's also done this sideways thing, but if you look, like the SPX chart is, sideways from here straight across. IWM's added and gone up back. It's basically at all-time highs right now, right? So if you look at this chart, so here we are, this is a 5-year. So we've taken out this sort of double top. We finally cleared that, then we failed, and now we're back up, and we're even back up above this from October, this high, right? So this last part, the last week, I would say, of this move is really curious, because this is pricing a Fed rate cut, I think, here. But like if something came out that was kind of hawkish today in the commentary of forward-looking guidance on future Fed cuts, I think this is the most at risk. And so if you were to hedge this event, so I am, going back to the beginning, I'm positioned for a year-end rally of a couple more percent on top of this. When I decided earlier, like yesterday, all right, well, how would I hedge this? I'm pretty much positioned for, another couple of percent. But as I mentioned, I feel like the bigger risk is to the downside. So I looked at IWM, straight away. And, this is expiring next, this is like the 19th. So when is that? That's next Friday. And this is just a simple IWM put down at this level right here. This is what are we looking at? The 245 put, right? Expiring December 19th. That's regular monthly expiration before we get into the holidays. And basically what this would do is if there was a really massively negative reaction to today, this thing would, just as it's outperformed on this bounce, the same thing would happen lower. So I looked at IWM as a potential hedge for basically all of the positioning in Qs and SPY type stocks. I think it's a good hedge right here if you're a little bit worried. I did another one out in January, and that is, let me find it. So this is actually a put spread out expiring January, monthly expiration. And this is the 245, 225 put spread. So that's buying the 245. You can see in this black right here. And selling the 225 put. And what that does is that creates a break even of about 242 in IWM, which is nothing. That's 8-9 points lower than here. And then it protects for that next, what is this? This is 20 points. It protects basically for $17 if IWM were to pull back into year end. Now, I hope to be wrong on those because the rest of my positioning is higher, like as we've discussed. This is how most of my year-end positioning looks. This is a chart of the SPY. I'm positioned this green zone right here. I'm positioned for my big win on a trade like this to be right at 700 in the SPY. And I have similar positioning in Bitcoin, which is, I'm not a Bitcoin expert. I'm not even a Bitcoin fan. I think it's all a little silly. But we have IBIT trades that really resemble that, with the equivalent in IBIT, which is 57, 56-ish, is my max gain of this zone in this options trade. And that corresponds to about 100,000 in Bitcoin. We keep getting up to that 94 level. We pull back. I don't know where we are now. But so that's my bullish positioning into year end looks like this, which is I don't want to spend a bunch of premium because I don't think there's much left in this rally into year end, but I think it's the bigger likelihood that it does happen. And I kind of want to call my shot up here. I want to call my shot at 100K in Bitcoin. I want to call my shot at 700 in the SPYs.
Both nice even levels there to
yeah.
pay attention
to.
And
so that's a big thing in options. And the reason is because everybody's doing the same thing at those levels. So you're sort of you're rooting for a pin, and the options market is helping you if you do get a move to that level, because often, well, we're seeing it right now, this 68.50 level, it's just kind of pinning. And then once it sort of stops at an area like that, everybody piles on and sells options at those levels because they expect it to kind of stay there into the Fed. So if you sold it calls and puts and condors and strangles and all the last week, you would have killed it. Because everything went, and that's why the VIX went from 28 to 16, basically.
But, well, yeah. And actually even just this morning, we were looking at the option interest and yeah, just looking at even the SPY, all the interest at 700, or everybody, all the action basically taking place at that 700 level.
Exactly. And I'm going to show you one thing real quick. I believe it's December 31st. If you go up to the 7,000 level, here, this line right here is open interest where my cursor is. Look at this 7,000 level. It's 70,000. Look at the ones next to it, 200, 300, 400. You know what I mean? So if you got a move up into, like if you got your Santa Claus rally right around Christmas time, and it got up to this 7,000 level, man, this is what you would see here is if you were approaching year end right at 7,000, you would see the market go up to like 7,020, get sold. It would come back to like 69.80, get bought, and then it would just compress, and absolutely pin right at 7,000. Now, a lot of this is going to get rolled in those days leading up to New Year's. But yeah, that's why I'm targeting 700 in the SPY. That's why I would be targeting 7,000 in the SPX. And you're going to see the same thing in Bitcoin. Everybody that's buying Bitcoin right now, institutionally, that trades options in Bitcoin, they're buying Bitcoin when it was in the 80s, and they're selling the crap out of that 100 or 100,000 level in options, and that's pinning all of that gamma up at that level.
Right. And you know what's just coming across my screen? I think Jerome is heading into the meeting here.
Oh yeah, we got a video.
Yeah, we have a live view here.
Yeah,
there we go. All right.
There we
He's
go.
Looking pretty good for 72.
So back in the day, it was when it was Alan Greenspan, is probably the most famous Fed chair of all time. Yeah. CNBC used to do a big thing where they'd send reporters to see the walk-in like this, and they would judge whether it would be a rate cut based upon the size of his briefcase or something. You're too young to remember that.
Yeah, that was before
somebody in the audience will remember this. I mean, it was insane. It was like, that's kind of funny though, because I mean, the joke, like, we're looking at charts, we're doing all this, the stock market's astrology for boys, and so
yeah, pretty much
like the size of the briefcase thing was like kind of classic. Like,
yeah,
you always got to remind yourself, nobody knows anything. There's no way the size of his briefcase mattered.
Yeah. And so now what is it, the red tie or something like that?
Oh, I mean, gosh, really?
Well, I mean, there's a bunch of silly things on all the prediction markets, poly market and whatnot, but we have about 40 seconds to go here.
Yeah, so let's you want to read it off when you get the headline?
As soon as I do, and then we're gonna get to this.
I'm betting a rate cut.
Okay, if we had to put money on it, we're gonna get a rate cut. All right, we have about 20 seconds to go here. I'm gonna do my best Joel impression.
There we go.
Got the bulls, we got the bears already. Rearing to go.
What do you have on the screen?
The e-minis.
Okay, cool. Yep.
Yeah, futures here.
All right, so this will be, I will say, the initial reactions are, in a word, dumb, right? So the first couple of reactions to a Fed, the statement, because then you got to figure everybody's doing dot plot reading, they're doing the statement, what words changed. So it must have just hit, right?
Yeah, looks like it just hit. Can I refresh the page fast enough here?
Yeah, I'm trying to pull some headlines. So Fed cut. I've got that guy, Nick, that's like the Fed reader at the Wall Street Journal right now. 3 dissents, Goolsby, Schmid opposed the cut. Moran wanted a 50 basis point cut. He's making his move to be Fed chair. There you go. Said the September shows 6 officials of 19 didn't favor a cut. The median dot is unchanged for 2026. The Fed will start reserve management purchases this week, beginning at 40 billion per month in T-bills, and then there's some statement changes. So the last part, reserve management purchases this week. So what reaction are we getting right here?
We just made a new high. We're coming off of it a little bit, and yeah, just to confirm, it's a 25 bip cut here.
Yeah,
like expected. Yeah. Do you want to continue going through that? I mean, we're coming off the highs a bit back.
Those were the big things, and the fact that the reason I immediately went to see the market reaction is I'm not entirely sure. So they just like kind of ended, you know, like this is a little bit above my pay grade. I didn't pay that much attention in economics courses, but they just finished like last week some aspect of QE, and the Fed will start reserve management purchases this week, beginning at 40 billion per month in T-bills. I'm not entirely sure what that means, but the market doesn't seem to care. And we are basically pinned at 68.50. So the options market absolutely had this correct, which was not a big deal. Now, what I will say is we're not getting anything stupid right now in either direction. We're only moving kind of in like a what's the range been? About 60. I think the lowest candle was about 68.35. The highest 68.55. I don't know. So like a 20-point range
right here. Yesterday's high.
Yeah. So we've been in a 20-point range here at SPX. It's all about this press conference, which doesn't start for half an hour. So Powell will start with a you know, his statement, and he's going to just say in that sort of boring monotone voice exactly what, but then the reporters are going to start to pepper him, and they're going to start to pepper him on you know, obviously the view of the future, what this means for, you know, future rate cuts in the next couple of meetings, what this means about his the end of his, you know, moment or the end of his position, I guess. What happens next, like what he's going to deny, you know, he's going to not take the bait on any of that. But I always think it's funny because it's like you can kind of get a general mood from that press conference because he is speaking off the cuff. He's a nerd like everybody, you know, in that position, but he's like, you know, he's a human, and he can't stay completely robotic all the way through that press conference, and he often divulges some more tone than one would expect. He also speaks to the room, not the room he's currently in that moment, the room he just came from. So we're getting these headlines of, you know, Moran, of course, is like, let's cut. And then Goolsby, Schmid, it'd be interesting, like the way he sort of describes the process and describes what happened in that room. It's almost like a cardinal coming out of like the Vatican after the Pope vote. So it's like,
yeah,
you know what I mean? Like that's also, you know, until you hear the Fed minutes, which is weeks from now, it's your first moment to get a sense of like, how much did Goolsby and Schmid think this was wrong? You know, how much was the dissent? Like, was it passionate dissent? Is it chaos there now? Is this chaos that will lead to, you know, an appointment saying, you know, I want the Fed, like, you know, being massively aggressive to help everything and help the stock market? So that'll be interesting in this, you know, moment. Now, if we go, all right, so let's refresh this real quick, just make sure I have the freshest option data. So this is live. This is a live expected move. So we've gone from basically into the meeting about a 0.6% expected move. We're now at a 0.5% expected move into the close, which basically means the options market is like, we haven't seen anything yet from the day, right? This is exactly what everybody was expecting. And now we've got about a 0.5% expected move into the close. And if you're doing the math at home, it's 68.50 in the SPX. And that is about, call it 68.90 to the upside and 68.10 to the downside. So basically, if Powell does something to either spook the market in the press conference, or he does something to get everybody giddy in the press conference, into the close, keep an eye on the levels just inside 6,800 and just inside 6,900, because if we go through there, it means it's a big deal. If we go up to like 68.90 and then we kind of fade a little bit and we're at 68.75, whatever he said, not that big of a deal, probably bullish for tomorrow and into year end. If we go down to 68.10 and we kind of bounce and we finish at like 68.20, whatever he said was slightly bearish. You'd have to see what happens tomorrow in order to see how big of a deal the market thinks it was, especially if they have tonight to noodle on it. But if you go in a straight line through either of those levels into the close, it was a big deal. And you've got to then position accordingly that if this were to take us through 6,800 to the downside into the close, you have to start to reassess, what your risk looks like for the next week or into year end. And if we rip higher to 6,890, and we go through it either by the close or tomorrow morning, we're going to 7,000. I can just kind of tell you, and it will turn into probably a little bit of a slow grind. But this is the kind of move I'm watching. So as we mentioned, those IWM heads, if we go up to 6,900 into the close or above, I would close, and we sort of held, and it wasn't a super volatile move. I would close these hedges, and yeah, that's sort of how I view this initial move. The market likes it so far, and now I just want to see how much it likes it, and I'm using the options market to determine that. And I'm basically saying it's sort of like if there's an earnings, and the expected moves 5% and the stock moves 4% in either direction, you're like, all right, it was a negative reaction, it was a positive reaction, but it wasn't that big of a reaction. The expected moves 5% and the stock moves 8%, the market was completely caught off guard. So whatever happened in that earnings event was not priced in the stock at all, and you have to be very careful about that move. The same thing here. It's like, keep an eye on 6,900 and 6,800. If we finish within that range after Powell's done speaking in that next hour after he's done, if it stays within that, kind of normal, it is what it was expected. If we go either side of any of those big round numbers, the market was slightly offsides.
Gotcha. Well, that's a lot to at least keep in mind here, and I mean, at least that's good to reference for the coming into the end of the year as well. So we'll see how the reaction continues to unfold here. We were just pressing on some new highs for the day, and I was just gonna quickly hop over. I was just looking at this in the background.
Yep.
What Powell's gonna say? We got 97%. He's gonna say good afternoon. So pretty sure on that one.
Wait, is this on what do you have up? I'm sorry, I was looking at Bitcoin. Oh my god, that's poly market, right?
The poly market, yeah. He's gonna mention weakening. He's gonna say sorry. There's almost 80% chance of a sorry there. Anyway, we'll see what he ends up saying here in about another
not in your
20
minutes. Not in your Canadian accent.
Yeah, exactly. Yeah.
So, all right. So the other thing I'm looking at here, which is kind of interesting, is the move in Bitcoin is kind of interesting right here. So I just pulled it up. I was unsure how it would be reacting. It is higher. IWM's ripping. Unless this fails today, this sets up very well for those two trades we were talking about earlier. So targeting 700 in SPY and targeting 100,000 in Bitcoin. So I'm also going to be keeping my eye on Bitcoin and into the equity close. It of course never sleeps, but yeah, that's how. And so there's a comment here about volatility, and so I think that's the one thing I haven't completely addressed yet, and then we'll get off and we can sort of watch Powell and whatever. If we go higher and what I was sort of explaining, that like we go up and finish somewhere near 6,900 at the close, that probably turns into a grind into year end higher. As I mentioned, that 7,000 level. I think the same thing might happen in Bitcoin. If Bitcoin started getting up towards 100,000, it probably turns into a little bit more of a slow grind. The volatility comes out of it. If this were to reverse and fail based upon something that Powell said, volatility would absolutely not explode, but it would knock us off that sort of that effect of going sideways a week and a half is having a disproportionate effect on the options market. It would break us out of that slumber. And so then all of a sudden you'd be like, all right, if you start selling off, where's the first point where where buyers step in? Probably be a 20 VIX, right? To the upside, if we start creeping higher towards 700 in the SPY, 7,000 in SPX, you're going to see the VIX go. What is the VIX doing right now? You're going to see the VIX go to very low. Okay, so the VIX is 1660 right now. If we are close to 7,000 into Christmas break, you are going to see a 13 VIX into Christmas. It's going to get absolutely hammered. So that's the good way to think about like your positioning, is if you were buying puts or buying put spreads or doing anything with expectation to the downside or to benefit as a hedge if the market made a move to the downside, you want to be long volatility for the next couple of weeks or month. If you are positioning for the market to go higher into your end based upon what happens today, it's not going to go vertical until January, I would say. So it's going to be a slow grind into year end. You get your couple point percentage rally. If we do anything stupid to the upside, I would imagine it doesn't happen until right around New Year's and into January. And then, we could go vertical. Who knows? All right.
We could, yes. Yeah, a little bit of a New Year rally.
Yeah.
Yeah.
January, so seasonally volatility, that everybody knows about kind of the October. We were delayed. October vol was actually quite calm. We didn't see volatility until November this time, but that fall period tends to be very volatile. The area right around Christmas and New Year's is seasonally some of the lowest volatility you'll see. It resembles mid-summer volatility, and it's just because there's not a lot of people paying attention. People are away. January into February, I believe, if you look historically at the VIX, is the second only to October, September, October, like that fall area. So, but it's generally not like right out of the gates in January. It tends to be sort of late January to say early March, like that window. If the market has volatility, seasonality, that's the season in the sort of late winter.
Gotcha. Okay. So being pushed a little bit. We do have a question from the chat here. Yeah. Oracle is reporting tonight.
Let's go over
it. Yeah.
So, let's see what it's doing like right now intraday. I'm actually kind of curious. All right. So it spiked. What did that do? 219. So $2. So it went up $2 on this Fed announcement. Look at this chart. This is insane. And I would say, so the harpoon, yes, but man, let's take the other side of that for a second. Look at this, where this is, by the way, like right here. It's lining up. Do you see this? So it's right at this low of September. And come on, what were people doing? That's 60% higher to get back to this level of 2 months ago. So anyway,
yeah, ouch.
Yes, absolutely. It could harpoon parts of the AI trade. So let's say they reported and this thing went back down, below 200. I think that probably puts the kibosh on any sort of ancillary, like not the NVIDIA, Broadcom, Google now, like that part of the AI trade, I don't think is super affected by Oracle. All of that secondary stuff, all of the hype and the mania, absolutely. But here's the flip side. This expected move is to 242 on the upside and 199 to the downside, let's call it. That's the expected move for today. If this thing reported and was like 250 after hours, which isn't inconceivable given that would only be about half of this gap fill, or not gap, but of this trend down, like a sort of reversion back towards this. If this thing was 250 after hours, and it was on the heels of us finishing higher on the Fed, which is possible, I mean, are we right back into it? Like, you might be able to start throwing a dart at some of these things that have been hammered the last couple of months. And Oracle could actually, it could kick off another little, at least mini round of euphoria. So I think Oracle's fascinating. I think it's the most, I think it's a more interesting earnings this week than maybe even Broadcom. So Broadcom's real. That will move it. It will move NVIDIA. It will move all that kind of stuff. And it's massive market cap. It's one of its top 6 or whatever in market cap.
Yep.
Oracle is the vibes. Oracle's the ultimate vibes test. And if this thing tanks and everybody's like, not only are we taking it from 350 down to 200, we're doing even more damage. Yeah, it's like, don't go near any of these kinds of stories. But if it bounces, it's like we could be right back into it. So it's a vibe check, I would say, on the overall AI trade and the sort of secondary parts of the AI trade. And if you were, I think, right near the tops, remember, I think I wrote an article basically saying it reminded me of 1999. And that felt like 1999. The question is, do we get more late 90s .com bubble vibes again? Do they return? My guess is yes. I don't think this is over yet. I think we see even more mania around the AI trade before it ultimately pummels everybody. But from much higher is my take.
Yeah, and I mean, it is sort of funny because Oracle was very much part of that .com bubble.
Crazy. Yeah, let's get Cisco involved in this, right? And
WorldCom, exactly.
But we're not to the pets.com stage of this yet, is my point. We're in like my sort of 2026 take, if it is like a really kind of, the market goes higher, and we start seeing stupid stuff. And stupid, I'm not judging. Not like, I love that. I love those moments in the market, right? They're amazing. But if we saw stupid moves to the upside, I think it's going to be eventually, the way this plays out is it's going to go from the sort of the AI build out, the NVIDIAs, and then the data center. And I mean, we talked about Cat last week, building the data centers. So we're still in the picks and shovels era of this. You're going to start to see the, oh, look what we've done with AI within our company. And that will be the mania part. You're already starting to see signs of it, of people calling, I don't know, Walmart an AI company. But you're going to see it go down, 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 down. And then, the funniest one I remember from the .com era was like a fish oil company said that they were a .com company. And that's the point where you want to sell everything. And it's like on the Today Show, right? And your grandparents are calling you, asking you if they should buy some stock with 6 symbols. So that's the point when you want to sell everything. But I don't think we're there yet. So.
Yeah. Like what is that equivalent nowadays? Like if AutoZone actually, they just reported on Tuesday. if
there was one that rhymed this morning though, and it got me a little nervous, I have to say. Is there was a bunch of articles today about like Elon Musk and Jeff Bezos wanting to put the things in space,
the centers in space. I
mean I think they're just whatever, but keep an eye out for stupid, like stupid stuff like that. But it'll be like a cascade. It'll be more than a one-off like that. I think that's them just a pissing contest between the two. So they hate each other, by the way.
Oh, Oh, you think so? Okay.
Oh, no, they definitely hate each other. Bezos and Musk. Yeah. Which is funny. I don't watch those like White House kiss ass sessions, but I wonder if they like separate them.
Yeah, that'd be hilarious.
Awesome. All right. I'm going to run. And then, it's all about the presser at this point. And where are we in SPX right now? We are 68.60. Yeah, I mean, nothing big yet. Everybody's waiting on the presser, but the initial reaction is positive. The market needs Powell to not be a wet blanket and a buzzkill. If he's not a buzzkill, we probably finish up closer to 6,900 by the end of the day.
Yeah. All right.
All right, Josh.
Great,
work,
great. We almost went for an hour here, but
yeah.
But everybody can tune into the press conference real soon here. And then those of you in the STN room at Stock Trader Network, we'll see you at 3:30 with Tony. And in the meantime, you should all check out Options AI. That's CC's platform that he's been showcasing that makes it a hell of a lot easier to show or to actually see what the expected moves are, what the trades, all the different kinds of spreads, put spreads, call spreads, butterflies, condors, where your P&L are going to be at. Just that visual part helps so much.
Nice. All right, Josh. Great one.
All right.
See you. See you, everybody. Thanks for joining.